So just to give you a brief overview of what we have on our farm, we have a liability umbrella, and it covers all of the liability issues that could arise on the farm. We have a $5 million umbrella, and it's $5 million payout per occurrence. And I would advise anybody who's in farming at all to have a liability umbrella on their farm. So that sounds like a lot of coverage, but we only pay $300 a year for $5 million of coverage. And if you look at it that way, I mean, I don't even think that I can go into my local PA's office and have it cost less than $300. You know, like if I'm getting 2 stitches in my finger, that's way more than $300. So it's a bargain. That liability insurance is a bargain. And because we have so many moving parts on our farm, it's really important for us to have that. So that liability insurance covers any accidents that we might have when we're out on the road with the delivery van. It covers any accidents that somebody might have directly with our stall at the farmer's market, but it also covers any foodborne illnesses that somebody might contract that could be traced back to our farm, which we hope that that would never happen, but it's good to have that, that peace of mind. And then of course, it also covers people that are visiting our farm as well. We do a little bit of agritourism on our farm, so that's very important to have that too. So there's the one component that we have, that umbrella of liability coverage. Then we have a commercial policy, and the commercial policy actually covers our greenhouse structures. And we had to do it that way because, well, first of all, we had to ask if they would cover our greenhouses, and they came back and said the only way that they would do it is through a commercial policy. The only other way that the greenhouses could have been covered on our farm is if they would have been smaller and not as big of a dollar amount to insure. So we have that commercial policy. We're very grateful that we did that because it has helped us in the rebuilding stages of rebuilding. And then we have a farm policy that basically covers everything else, including our vehicles and our home. And I talked a little bit about the commercial policy that we have on the greenhouses. So let's say if we wanted those greenhouses to be covered under the farm policy, under our insurance that we have, it would have to be 10% of what your total cost of your home would be. So like, let's say if you had a $200,000 home and you had a greenhouse that was only $15,000 to replace, then that would be covered under your farm or your home policy. But since we have lots of greenhouses, that's why they broke it out and put it into a commercial policy. So we have those 3 moving parts, which really kind of 4, because our vehicles are covered under insurance that's part of the farm policy. So it's a little bit complicated, but we're satisfied with all of that. The other thing that we were able to do under that commercial policy was insure the crops that would grow in those greenhouses. And that actually turned out to be quite beneficial too. That was something that we didn't know if we would be able to do. So we asked, and I think that's the most important thing. As I said earlier, you've got to have that transparency with your agent, those lines of good communication, and don't just assume that they're going to know or that you can't do something. Ask. I mean, they're in the business to make money, so they might be interested in insuring something, even if it's not something they've previously done. And for us, it was an easy decision to make, to go ahead and spend the money to have those crops in the greenhouses insured. So we had, and I hope I get these numbers somewhat right. So it was between $600 and $700 a year to insure the greenhouse crops at $90,000 limit. So it's, you know, that would be like a week's worth of deliveries at the minimum. And so it's important to have that income replacement for us. The one thing that we did discover, because we looked at our policies, is that those crops actually would have to be planted in the ground in order to have coverage on them. So, you know, if we pretended that the derecho came in February and blew away all of our greenhouses, we couldn't say, hey, we had this whole growing season that we missed because we don't have greenhouses available and we are losing out on that income. They wouldn't cover that. It has to be the actual physical crop planted. So I think that's probably enough out of me now. So
Oh, that was great, Anne. So Emma surpassed her technical difficulties and joined us. Emma, do you want to introduce yourself really briefly and talk a little bit about your whole farm policy?
Sure. Yeah. And sorry about the delay. Suddenly, I have to use our oldest computer because it's the only computer I have a camera on. I guess pre-COVID, we didn't think we had a need for having cameras on computers, so it's a little bit slow. But yeah, I'm Emma Johnson. We have, I co-own and operate an apple orchard and vegetable farm, and we do some row crops outside of Central City, Iowa, in eastern Iowa. And we farm with my parents, and we initially, because we're mostly specialty crop, we've always had crop insurance on our 45 acres of row crops, but never had insurance on our specialty crop for many years, which seems strange because 95% of our income actually comes from the specialty crop. So here we were insuring 5% of our income with the crop insurance. When my husband Marcus and I moved back to the farm in 2012, we always initially thought that we were okay with that lack of insurance because we were a diversified farm. We were growing lots of different crops. We have apples, which were a perennial crop, and then we grow lots of different annual crops, and we were selling them lots of different outlets, and we felt like that was enough. We were kind of self-insured from that standpoint. And a good year, we were kind of saving back some money for those bad years. But we moved back full time in 2012, and that was the year where we lost our apple crop completely. And all of a sudden, and it was a drought year, so the annual crops actually didn't do so well too. So that was the reality of we need one more level of insurance. And I look back in that year, and I think it did impede our continued growth in our business. Luckily, we have a good relationship with our bank, and we were able to continue to move forward, and we didn't lose the business, but we definitely lost the momentum in growing our business. And I would even say we lost several years in growing our business. And so we wanted to find a way to have some stability in our crop production, or in our securing our income from year to year. And my dad had previously looked into NAP insurance, which with NAP insurance, you're able to insure each individual crop. But at that time in 2012, 2010, 2012, the payout for that was based on not selling direct to consumer. The payout was based on selling completely wholesale, but wholesale on a national level. So that payout that cost of the insurance was actually going to be more than what we were going to get for payout for what our production was. So actually my introduction to Practical Farmers of Iowa was trying to solve this problem of insurance. And I remember meeting Liz Kobe at the Fruit and Vegetable Growers Conference, and she talked about how they were trying to start getting a database of Iowa growers yield database so that they could start talking to the insurance companies to show, look, Iowa's growing specialty crops. We need to have more options for insurance. And I was like, yes, we do need that, because I just saw what having no insurance meant on specialty crops. And luckily, I don't know what brought whole farm revenue to Iowa, but it suddenly was an option. I think 2016 or 2015 might have been the first year where it was an option for here in Iowa. And we started insuring in 2018 was the first year. And that was partially because we had changed our business entity. And that meant we had to wait 3 years to have 3 years of a Schedule F as a business to show that we made income as a farm. So as soon as we had that information, we started to insure whole farm revenue. And that really enabled us to be able to move forward with our business. The bank feels excited to move forward and help finance different things on our farm, because they know that if we have a bad year, we have insurance on those crops. So it's a way for us to move forward even in the years where it's a bad year. And we think that that cost that we pay is every year is worth it. And it's sort of surprising because we ended up wrapping our row crops into it, and the amount we spend on the road, we spend about twice as much as we spent on just that crop insurance that was just for the corn and soybeans. But we insure our whole income, and we insure at an 80% level. So I guess that's where we're at. I've never had to put a claim out yet. So this is going to be our 4th season. And I guess you'll have to talk to me once we have our first claim to see how that payout works. The one thing is you have to go through the whole season, file taxes to then prove that you've lost revenue, right? So it does work differently than crop insurance would work on individual crops. But I'd be really interested to hear what other people are doing to try to build resiliency in their farm, because I think we can all learn from each other. And I know I'd be really interested. I know some people might be doing multi-peril instead of whole farm revenue, and I'd like to hear that contrast too. So I guess I'd like to open it up.
Great. Thank you, Emma. Yeah, so I think, if you have questions, feel free to type those into the chat or even maybe unmute and ask a question. I also just want to encourage you all to feel free to chime in if you have an experience that seems relevant to someone else's question, or if you have an answer that you think might be helpful. So feel free to for anyone to chime in as we go through this discussion here. So Emma, Kim has a question here in the chat. I don't know, Kim, do you want to unmute and ask this question?
So my question is, when I've asked about whole farm revenue or multi-peril in regard to specialty crops, I've always been told, not the Schedule F thing, but I was told that I have to have 3 years of production records. You know anything about that?
Yes, I do. And I do because I think the second year that we did whole farm revenue, we were actually audited. I feel like that's sort of our mantra on the farm, is try to have everything you're supposed to have. Because we tend to always attract audits for whatever reason. And because I had done that project with Liz Kobe for yield database, we had sort of already switched to our record keeping methods. So we have close to a decade of production records. But I have to say, those production records are, you only need them if they ask for them. And it's fairly flexible on what that format can come into as far as your production records. I think the first year that I applied for whole farm revenue, Beth Capel, my insurance agent, she originally had said, if I have apples, we have 4 prices that we sell apples. And she said, well, that's 4 inputs of how many pounds you sold at this price, how many pounds you sold at this price, how many pounds well, we've kind of learned together. No, it's sort of an average price for what you're selling is fine. And then when you want to get into the weeds, if they want to see your production records, they'll see that, okay, 25% of those you're selling at a higher price, maybe 50 you're selling at a lower, but the average out to that price. And the other thing is how I report and insure the crop can be really left to how I don't have to put per acre. I can do it per linear foot is my yield, per square foot is my yield. Those are really up to me as far as how I want to record that information. It doesn't have to be fit into any sort of standardized national way of keeping track of yield. So that gives you a lot of flexibility on your end, because it's really just what you're saying your yield is based on your records. So that gives you a lot of flexibility too, I think, on how you want to report and track that so it's the easiest for you to keep track of. And they often will ask, how do you know your yields? Every year, I think, and I did upload a packet for what you have to fill out, and it seems like a lot of pages. But once you fill it out, I pretty much copy from year to year that production, and I just make edits to things that we're increasing. So it's sort of the first year is that first hurdle, and it's scary and it takes a lot of time. But once you do that, you've done all the main work and it is just repeating it. And hopefully if you find a good agent to work with, she's figured out, a way to streamline it also. And she'll actually pre-fill out a lot of things and tell me, okay, what do we need to change about this? So I think it seems scary in the beginning for that first application. But if you're able to work with your agent, and I would push to make sure you're inputting things and keeping track of things that makes it the easiest on your end. And hopefully your agent will be on board with that. Hopefully that answers your question.
It does. I'm curious about the part about you being able to define, whether it's per lineal feet or per acre, because I tried to get multi-peril on my blueberries this year and was told it had to be per acre. And I actually had to find the tea yields out of Michigan for the agent, because that's not a typical crop in Iowa, so they don't have that information.
Yeah, does anyone else have experience with multi-peril? Because there's been a few times we've tried to do multi-peril, and I know with our apple orchard, we have a lot of varying densities of our orchard. So then that becomes a weird hill to climb as far as what is your yield per acre. Because for us, we actually put the yield down per tree. Our average yield per tree, which really helps us because we know how many trees are alive and producing on our farm. Our acreage is kind of a little bit loosey-goosey because some of our row widths are wider and others are narrower, and we have bigger drive aisles and things like that, and they're fine with that.
So just a quick comment, Emma mentioned that there's some example paperwork on the browser webpage that has been uploaded for Whole Farm that you can look at. And so if you look at the event page on the platform website, if you go to files, then it should be there for you to download. I also just really quickly want to mention that Whole Farm revenue in particular provides a lot of flexibility, and especially with some really recent rule changes, even more flexibility to the insurance agents about what they're going to require and not require. So some of the disparities might just come down to the particular company or agent that you're working with.
And I did want to mention too that so we're constantly planting trees, so our yield and we're also growing more vegetables every year. Well, less of some vegetables, but more than others. But generally, we're trying to grow our business from year to year. And so we do actually pay a little bit more on our premium because we are able to, the 3 years of data doesn't tell the whole story, because if I have a block of trees coming in production, those should be included in my revenue also. And so I think last year we ended up insuring to be whatever that, they average the 3 years that you input, but then you can add a multiplier to that. And I should have looked up what our multiplier was last year, but 2 years in a row now we've added a multiplier so that we're insuring a little higher level than what those 3 years reflect. Because everyone knows too, growth is not exponential too. It sometimes goes up, down, and then up, and so if there's a way for us to sort of even that out, and we're insuring at a level that's actually more realistic to what we anticipate to make, that helps too. So I know for that reason, the first time we added a multiplier, we got some pushback from not my insurance agent, but the people reviewing the policy. And I had to do a little bit more rigmarole to show that, yes, we are expanding our business and we have this many more trees that are expected to produce. And that took a little bit more conversation. But after going through that, then our agent, she could better serve us as an advocate, and knowing what questions to ask or how to answer the auditor, the people who looking over the paperwork, it was just her first time through it. So she didn't really know how to respond to some of those questions.
And I just want to ask you real quick, because I know you also have some corn and soybeans, right? So do you use multi-peril insurance on your row crops?
We do. Yeah, that's what we use for the row crops, both conventional and organic. And we always have. That's also an excellent risk management tool to use.
Oh.
Yeah.
So Tom had a question. Oh, go ahead, Amy.
I was going to say, we've never tried to use the multi-peril insurance for other specialty crops on our farm, just only for the corn and soybeans.
Does anyone else maybe have some experience using either whole farm or multi-revenue for kind of specialty crops, or any experience with kind of that unit of measurement question? Doesn't look like it. So maybe oh, go ahead, Emma.
I was just going to say, before we could get whole farm revenue, we did have, I feel like we've worked with several agents who were trying to get our business, and they said, oh, you should do multi-peril. And I think we've had multiple adjusters come out to our farm and sort of survey what we have. And it seems like it becomes a bigger monster on their end, and then they suddenly become less responsive because they realize it's a lot of work for them to put in, and then we don't hear anything back. And so that's as far as we've gotten with multi-peril for especially crops, because it's just harder. They don't have an expertise in Iowa per se with a lot of these specialty crops. So it's taken us, I mean, if someone has an agent that will do multi-peril for specialty crops in Iowa, like, I want to know their name. But I also know that my agent does do multi-peril for other farmers, and she was willing to do whole farm revenue. And we have been in discussion that maybe I should look at the option of multi-peril, because it could be better coverage. Like, she knows the payout for multi-peril. She stands by that. She's never seen a whole farm revenue policy have to pay out. So I think she is definitely happy with multi-peril as an insurance agent and knowing that it's insuring her customers.
So real quickly, Anne, there's a question from Jerry here, kind of asking for some background about what multi-peril is. Do you think you can take a stab at? I would say that broadly, multi-peril is probably the most common type of crop insurance that we see in Iowa. But
yeah, so I'll take a stab at it too, because this is probably more the domain of Eric, since he handles the row crop operation on our farm. But it's federal crop insurance basically, and it's based on based on yield data of your farm. You have to get it through an insurance agent, but then there are also things that you have to comply with according to the federal government in order to receive the multi-peril crop insurance. And I don't know, there might be people that have better explanations of it than that. If you do, feel free to jump right in there, but that's it in a nutshell. And part of the problem is in Iowa, we're so heavy on corn and soybeans that, as Emma was explaining, there's not a lot of experience insuring those other types of crops. And so it becomes very difficult. And then a lot of times too, they want to base your income off of what would be like a wholesale figure for sales for huge growers, which that's not what we typically find in Iowa either. So anyway, and so Tom, I see you have well, first of all, does anybody have any other questions on the multi-peril, I guess, because I have a little comment on insuring trees, so.
Yeah, before we get to that, I will just add that, because there are so many multi-peril policies for corn and soybeans, and because the yield data is so robust, and just the way the program is structured, those policies are really easy for an agent to write and pretty profitable for that agent. And so then, there's seems to be a stigma among insurance agents against some of these more complex things that maybe aren't as quick and profitable as some of those multi-peril policies for corn and soybeans. So Anne,
yeah, which I think that really goes back to, again, the relationship that you have with your agent, which I think Emma's description also highlighted. You have to have a good relationship with your agent. You have to be transparent about what it is that you're doing and what you want, but also your agent has to be honest about what they can and what they think they can and can't do, right?
Right.
So, yeah.
Sarah did make a comment here too that they do have multi-peril on apples, so it is a monster, but we need to have it. We have a champ of an agent who goes to bat for us. I don't know if Sarah wants to add anything there, but otherwise, Anne, you can maybe address Tom's question about insuring trees a little bit.
Well, so we actually discovered that we had trees that were insured under our farm policy when the derecho came through. So we have like 0 trees left on our farm, just landscaping trees, right? So it is possible to have trees covered. And I think that's something where you have to ask your agent, just like we had to ask our agent to find out, would they cover greenhouses for us? And if so, would they cover the crops in them? You have to ask them, and then, you have to weigh the cost of insurance against the risk that you're trying to prevent. So, but I would say, Tom, I don't know, do you have your trees insured?
Yeah, Tom, feel free to unmute. And
Yeah. And Emma, do you have your actual trees insured? Have you ever tried to do that?
Yeah, so we have, and I'm listening to everything that you're saying about farm insurance, because our farm insurance agent retired, and we since have had a new agent, and that relationship is not the same as that other agent. And we do have our trees insured, but something that has always bothered me is on our farm policy. So it's insured for, the loss of that crop yield from destruction, like a derecho, but I don't believe, and I have to look at, it doesn't cover replant, and it doesn't cover the lost crop. And that's something that we've asked our agent, and I feel like he's not going to bat. So it's probably time for us to change agents and really find, especially after derecho, it kind of it wakes us all up to the fact that like these things can happen. So luckily we didn't have the destruction that you guys had on your farm, but we won't keep our fingers crossed and hope that continues. So
I will say that that's pretty common of most crop insurance specifically, is that you're only insuring, yield from a particular year, not necessarily any capital or, capital assets or structures or anything like that, and not necessarily like the tree itself, and not lost production in future years. Tom's unmuted.
Oh, go ahead, Tom. But I'd also be curious to hear from Sarah what she's doing with her apple trees, how they're insured, as far as if there was a catastrophic type event.
Yeah, let's hear from Tom, and then maybe we'll jump to Sarah.
Okay. Every insurance agent I've ever talked to said it was not possible to insure trees, the trees themselves, only the crop growing on them that year, except for one agent, but he was only able to offer insurance to Nebraska residents, not to Iowans.
But Ann, it sounds like your trees are covered under your property casualty
Right.
policy.
Right. So I should add that it was for cleanup of the tree. So we'll just get a payout per tree to clean it up. And it did also have a cap on it at 30 trees, which we used because we lost every single tree on our farm. But, some of that cleanup you can do yourself, and then, the money you can reallocate to purchase of new trees. So, yeah.
So before we jump to Sarah, we've been mentioning some acronyms. So Emma mentioned NAP, which is the Non-Insured Assistance Program. And like Emma mentioned, NAP pays out almost entirely based on wholesale prices. So the cost benefit often isn't there. But there's also TAP, which is the Tree Assistance Program, which is kind of, at least intended to pay for replanting of trees. So I pasted that link in there to the Tree Assistance Program. I don't know if anyone has any experiences with the tree assistance program, but I don't know, Sarah, do you want to unmute and talk a little bit about your multi-peril?
Sure. You're right. In my experience, you can't insure the tree. You can only insure that production for that year, and you're not covered for your future losses of production. We did use the TAP program probably around the year 2012, and it, I unless I lost a lot of trees, I may not do it again. It was very challenging. And I think that's really linked to the experience of the FSA office that you're using. So even just certifying my acreage for Farm Service Agency was it's laborious and fairly traumatic. And I finally, with my crop insurance agent now, we only plant 100 or 200 trees at a time. This was our first year of putting in 5,000 at a time. They want that separated out as a separate unit, and then it's going to be separated out as a separate unit until it reaches 150 bushels per acre, and then for 5 years after that, so that it can build its own yield. And so my document on 40 acres is up to 42 pages. And I finally called the guy that's 10 times my size down the road and said, what are you guys doing? Because I don't want to pass along to my future children a document that they can't work in. But I would be interested in looking at the whole farm. But it, even though it takes up a significant portion of my mental space, it has saved us with the multi-peril insurance that we've had. I think we've had 5 claims in 10 years. And it is $1,000 of premium for $10,000 worth of coverage. So it is not cheap for us, but when it pays out, it has really helped us cover farm payments and payroll for those years. So, and I think, so I'm from Wisconsin, and there are only certain counties in Wisconsin that you can get multi-peril coverage for apples. You can get other counties to co-sign for you, but like the woman who was mentioning about the blueberries and searching tea yields, if you have to do that, like if your county is not one that's covered, I think you have to do all of the legwork. And it, like everyone says, the first year it's scary. I think I cried through 5 of the first appraisals, and you just keep going because it's your livelihood. You are the one who cares about it the most.
Thank you, Sarah. So Anne and Emma, I mean, you both have talked a little bit about the importance of this personal relationship, and Anne, it sounds like, you have a good relationship with your insurance agent now, and Emma, it kind of sounds like you might be looking for a new agent, or your current agent just retired, so there's maybe a period of transition there. I just wondered if you could each talk about, maybe the importance of when you have a good agent and when you have a bad agent, and maybe kind of the strategies or tactics that you've used to foster that relationship. So I don't know, we'll start with Anne, I think.
I was waiting to see who would be tapped to go first. So I think the best indicator of a good relationship with any professional person that you're working with in regard to your farm business is their level of responsiveness. And as I said, they are working for you, but you also have to, tell them what you need, what you like, what you don't like, even down to the type of level of communication that you have. So this is one thing that I forgot to say in the opening. It's very important to have an annual review every year, review your policy with your agent, because there may have been pieces of equipment that you've purchased or things that you sold that you don't remember to tell your agent. And so it's good to look at that policy every year and figure out what's going on. And then, maybe you need to raise or lower levels of coverage that you have as well, based on what's happening on your farm. But anyway, just to kind of illustrate that importance of the agent to be responsive to your needs. So our former agent, and this is part of the reason why we left, our former agent always called us to do our annual review in April. And he wanted to do it in April or May. And I kept telling him several years in a row, this is the busiest time, possible busiest time of the year. Please don't call us to do that review in April or May. It's much better to do it in the wintertime. And he didn't listen to that. He continued to call us and ask for that annual review at that time frame. But the straw that kind of broke the camel's back was the fact that the agent was also not very transparent with us. So we had an employee who had a problematic driving record, let's just say that, but we needed to make sure that this employee was covered when he was driving our farm vehicles. And the agent told us, no, we won't cover that. We won't cover that individual. And so we said, well, that's the deal breaker for us. It's time for us to go look for coverage elsewhere, which that was what precipitated the change. And several months later, our agent, was feeling remorseful, and he came to us and said, well, we can cover that employee just under a different company. And we said, well, it's too late now. So they do work for you. You do, but you also sometimes do have to make very clear what it is that you want or you don't want. And always ask. It's their job to explain what the coverage entails, why they can't do something, why they'll do it the way that they do it, like with the commercial greenhouse coverage and things like that. So I would say those are all important. Those are the two most important things to look for, is the level of responsiveness and then the transparency, but it runs both ways. So.
Thanks, Anne. Emma, anything to add? I should clarify that your property casualty insurance agent just retired, correct? And yes, but.
Yes. So yeah, our property and casualty insurance is that's what transferred. We've been very happy with our whole farm revenue insurance agent. And I did want to add to secure a whole farm revenue. Definitely the premiums, it sounds like, are going to be lower than multi-peril. But the reason for that is you have to have 3 crops at least to sort of apply for the insurance. And another hiccup for apple orchards is you have to separate. They are not going to insure the apples that you process into something else. I haven't looked. We're an orchard that's just getting into processing. Up to this point, we've always sold just fresh apples. We've looked at runarounds on whether we need to actually have a separate business to run the processing, to process the apples that we're then selling the apples to. That could be possibly a route to take for that, but your records are going to need to reflect sort of just the apples that you're selling fresh, which seems sort of strange because corn is processed, it's dried, it's shelled and dried and processed in a way, and so are soybeans, but for whatever reason, apples or other vegetables aren't thought of that way. And then I also want to say that as Anne spoke about knowing what to ask for, I feel like one reason we're unhappy with our farm insurance agent right now is because I feel like he's giving us solutions to problems that we didn't say we had, whereas the things that we want to solve or we want to make sure are insured, he's not giving us answers to. So you want to make sure you're not getting upsold to solve problems that aren't problems on your farm and that you're insured on the place, because you know where the holes are on your policy. You know that if you're running a lot of deliveries, you want to make sure when you have an accident that that's going to be covered. And if you're selling, like Anne said, when you're selling vegetables or fruits, that you have a possibility of a foodborne illness. So you want to make sure that's covered. And you maybe don't worry so much about, I'm trying to think of things that have been upsold to us, but I think it's hard when you're constantly saying, no, I don't need that. I need this thing to really be covered. That's maybe a proof that you need to change insurance agents. And then I did see a question about layering whole farm revenue and multi-peril, and that is an option. So for our row crops, which is easy to insure as multi-peril, which is what we had before for the row crops, you can layer those two policies. For us, we didn't feel like that extra cost was really going to get us much bang because we only have 45 acres in row crops. It's not a huge part of our business. It's not a huge part of our income. And for us to put additional insurance towards that didn't seem, we'd rather packet that money and have it towards, you know, have it in the bank than have that insurance. But that's definitely an option. Jorgen, I think you're muted.
Still can't hear you. There we go.
Can you hear me now?
Yeah.
All right. Weird. I just said, thanks, Emma. Thanks for catching that question that I missed. I also just want to point out Kim's really great comment in the chat box. So make sure you read that. We have about 8 minutes left. So I just want to open it up if there are any questions or comments. So Dan has a question here. Can you explain the difference in payout timing between whole farm revenue and multi-peril, and also ceiling of coverage? I will just, Emma mentioned you can't insure like processed products. So just the terminology that you may read about is like value added or value added products. So you're insuring the crop, you know, on the, as it's harvested from the plant or the tree, not as it's processed technically. So if you see no value added products, that's what that terminology refers to. But Emma, I don't know, can you speak a little bit to payout timing differences and maybe ceiling coverages? And then I don't know, someone else on the call too might be able to speak to that a little bit.
I don't feel real competent talking about the multi-peril because we have had payouts with the row crops with the multi-peril, and I know that my dad has always handled that part of the operation, but it's definitely quicker and within the same calendar year that payout as your loss. So I think that you tell your agent that you've had a loss and other people have this, then they're able to sort of certify that you do indeed have a crop loss, and then you get that payout. Whereas whole farm revenue, I haven't had to, we haven't actually had a crop loss, which knock on wood, hopefully that continues. But if we were to have a crop loss, let's say we have a huge frost event and we lose the orchard crop for a season, then we would have to wait the full calendar year until we file taxes. And then I send that Schedule F as part of the application. But there is a little piece. So you certify your expenses over the year on what you have for expenses. And they base that on your Schedule F from previous years on what you have for expenses. And they have allowable expenses and non-allowable expenses. And that's if you can apply for an earlier payout. So like if I had and lost my apple crop completely, but there's still expenses of, I still need to spray the orchard to keep disease and pest pressures down. Even if I don't have an orchard crop, I still probably have some labor as far as pruning, managing the understory. There's still expense to managing that crop, even if I don't have a crop. And I don't know exactly how that works, but there's a reason why you put that in your application, because so that you can cover some of those expenses through the season before you get all the way over to the Schedule F.
Yeah, so Sarah, oh, go ahead, Dan.
I was just going to say thank you, Emma, because I had worked at a farm and we had significant black rot issues with our brassicas, and that led to a lot of shortfalls in the income throughout the year. So we had to take out an operating expense loan. We did not have any insurance program, but we had to take operating expense loans out to cover those payments, the payroll, et cetera, throughout the season. And I was just wondering if a farm had to also still do that, but then make the payments on the loan with the whole farm revenue at the once that comes through.
Yeah, and I just want to, I've never had to take, I mean, I don't know how the payout works, but they take that information for a reason, and that's possibly a discussion to have. If you're interested in whole farm revenue, ask your insurance agent, and it's definitely a question I want to continue to have with my insurance agent, because you want to make sure that your expenses are correctly tracked then, if you're going to rely on that.
Yeah, so I mean, so in the abstract, in the theoretical, whole farm is insuring your revenue, and multi-peril is insuring your yield, right? So like for corn and soybeans, you get a payout as soon as the adjuster confirms or proves yield loss, or if you want to test harvest because you don't think the adjuster estimated it right, you can do that. It sounds like Sarah made a comment here for apples. They find out their payment only after they've sold the product. And then their ceiling is based on 5 years of production history. And I think that's pretty standard for multi-peril.
And that's 100% of that average rather than the 80 to 85% or whatever of the whole farm revenue?
That's a good question for Sarah.
So I don't have any experience with whole farm. And I mean, with the multi-peril that I've found, like 65% loss is that's like the magic number. Once you hit 65% loss, they'll pay the whole policy out. But if you're under like 65%, once you've proved all your production, any losses you've incurred to quality, they have this final magic chart that they pull out and then change all of their numbers by this one chart. So as far as it, to me, it just seems like it's very complicated. There's a rule book that I'm playing by that I don't have. And you know, I just keep slogging through it because it's the only option I have.
Kate made a comment here that in the case that you are layering multi-peril and whole farm, any claims or indemnities that you receive from multi-peril is later calculated into revenue when you look at whole farm. So again, there's a potential to actually have a yield loss, but if you don't have a demonstrable revenue loss, then there may not be a whole farm payout. That's pretty abstract and theoretical, but we have just a couple minutes.
Jorgen?
Yes.
I would say that I had an example of that this year in my blueberry field. So 2020 was the second year of being open for U-pick. So really only my second year of production record. So no insurance. Well, I take this back. I bought hail insurance. I was told I could buy hail insurance, but I didn't qualify for the multi-peril or anything because I don't have 3 years of production. So we got a frost, then we got hailed on. The adjuster came out. We walked through every variety, made notes on what we thought the percent of loss was from this hailstorm. And then they denied the claim. And I won't go into all that, but I won't ever buy hail insurance again after that experience. But the takeaway was, so one variety out of 8, we lost all production. There was literally no berries. It was just at the right stage that the hail knocked off all the blooms and that variety was done. But since we're in the period of growing production every year, you know, these plants are still young and they're not to full production, we actually made more money than we did last year with one whole less. So, you know, with one less variety in production. So we only had 7 in production instead of 8 varieties, but we made more money. So
yeah,
I think that is exactly what you just described, right?
Yeah, and if your whole farm policy, you know, it sounds like in Emma's case, her whole farm policy is taking into account some of the growth, and so she's ensuring like potential revenue. And so if that's the case, you know, you can make the argument that even though your revenue was greater, it wasn't as great as it should have been. But yeah, it's clearly quite complicated, right?
Yeah, and even so, I mean, we've done the calculations on our end on when the whole farm revenue would kick in, and it really would only kick in if we lost our entire apple crop. So, you know, when Sarah was talking about the multi-peril, she's slogging through that, but she's getting, you know, I would hope not 1 in every 5 years we're losing the entire apple crop. It's probably closer to 1 in 10. And so it's partially because the way, you know, our other way of building resiliency is our diversification of other crops that we're growing. And that's sort of self-insurance in some ways. But as we put more, and we knew as this is a business, as we continue to grow the orchard, we needed to, essentially we have whole farm revenue, but it's really for that orchard crop, because if we lost all of the corn, or if we had planted soybeans that year, it still won't kick in. If we lost all of our potatoes, it still won't kick in. What's going to have it kick in is if we lost all the apples. But that seemed important to us because as we grow the orchard, every year we're planting a couple hundred or a couple thousand trees. That's going to be an important thing that we want to be able to continue to grow that part of our business. So.
Well, on that note, we are just a couple minutes over time. I feel like this is a topic we could talk about for a very long time. I appreciate all the questions and comments and input. I want to thank Emma and Anne again for serving as kind of our co-host for this event.